Business budgeting is so fundamental to running a business, but a lot of times most businesses don't have a budget, or if they do, it's overly complicated and not followed. In this video, I'm going to look more closely at how to build a simple budget, one that you can use to track your business and really think about the performance of the business going forward and make actionable decisions. And that's really the point about budget, is it's not something that just sits on the shelf for a year and then you do it again next year and don't look at it. It's really something to build, to look at and track on a regular basis and see where the business is headed and make any adjustments that you need to make to the business to make sure that you're successful.
Okay, so let's dive in. The first thing that you want to do when you're building a budget is actually start with the historicals. You can't do a budget without kind of looking at what you've spent and what you've earned in the past. So let's go through this. So you could easily, if you're using something like QuickBooks or Xero or any of the other accounting software, you can do an export that basically looks like this. So across the top is your monthly columns, and then the major categories of an income statement down the side. So basically, this is a dummy report that basically says, per month, what is the revenue that I've earned? What is the cost of providing that revenue? So again, back to the pizza example that we used in a previous video. If you're running a pizza store, you sell $5,000 worth of pizza in January, that costs you $2,500 to make the ingredients that goes into those pizzas, and that leaves you with $2,500 of gross profit. If any of these terms are not immediately understood to you, watch my other video on understanding an income statement, which really explains some of this stuff. So, basically start with what you did last year. So this is last year's income statement with all the by months and how much I made in revenue per month, what my cost of goods sold was per month, therefore what my gross profit was per month, and then what my major kind of expenses were per month as well. And you can see this, this kind of varies around a little bit. Some months I'm traveling, some months I'm not, and some other expenses, etc. And that leads to, some months you're making a profit, or like, February where you make a lot of money, or other months you lose money like January and March here. So basically what we've done here is once you've built this average or taken the export from your accounting software, you come up with an average per month. So what's your average revenue per month? What's your average cost of goods sold per month? And then what are your average major expense categories per month as well? So, on an average basis, this business ABC company spends $4,000 a month on wages. It spends $1,000 a month on rent, spends $200 a month on marketing, $300 a month on travel, $100 a month on office expenses, and $100 a month on other expenses, which adds up to a total expenses on average per month of $5,700. So what you do is you take those averages and that you use those to build a budget. So let's start looking at that, what that looks like. So we go to a budget template here. And what I've done is in this column here, I've imported those averages from last year. So last year average, I made $20,000 a month in revenue. My cost of goods sold on average was $10,000 a month, or 50%, right? Like I think we will use this as a rule here. So if we divide the cost of goods sold over the revenue, my cost of goods sold is typically 50% of my revenue. So again, back to that pizza example, if every dollar of revenue you make, you're typically spending 50% of that, or 50 cents per dollar in ingredients that goes into those pizzas. And then on, you've got the other last year averages of major expenses. So let's actually start then building the budget. So, you look at last year, you made $20,000 a month on average in revenue. What do you think you're going to make this year? Is it going to be better or worse than last year? That's the first question that I would ask myself. And we think, back to the pizza example, the last few months of the year, we saw more customers coming in. We've seen more people kind of showing a bit of brand loyalty to our pizza store. So we feel pretty good about this. So maybe we think, instead of $20,000 a month of revenue, we can make $22,000 a month. and just copy that across. And you don't have to get precise with this, with seasonal trends and that sort of stuff. Really, it's more of a, okay, we made $20,000 a month last year. What can we make this year? Or what should be our target for this year? Well, you know that on cost of goods sold, that 50% of your revenue is cost of goods sold. So if we just do the revenue times 0.5, that gives us our cost of goods sold for the month as well. And that gets us to our gross profit that we've talked about before. Okay, so just to recap where we are, we did the revenue per month. We think we're going to have a better year than we did last year on average. We did the cost of goods sold at 50%, which is what our historical percentage cost of goods sold was, and that gets us to our gross profit. Now let's look at the major expense items as well. So last year we spent $4,000 a month in wages or salaries, and this year we haven't hired anyone, so we expect to be able to deliver the more revenue with the same number of people. So let's put that at $4,000 a month, just same as last year. The rent last year was $1,000 a month. That hasn't changed. So we're going to be consistent with that. You know, we're going to, on the marketing side, we spent $200 a month last year. And really, like, you know, we want to step up the marketing a little bit to drive that extra revenue. So for this, we're going to spend actually on average $250 a month versus the average for last year of $200. Travel, I'm going to say, let's say that's just about the same as what last year was, no difference. Office expenses was 100 last year, no reason to see that change. And then other was 100 last year as well. And then, so you've built basically what your monthly budget looks like. And we just copy that across to go all the way across like that. And then you have your monthly expenses, which is very consistent with last year, obviously, because we really only changed the marketing expense. And then that leads us to profit before tax. So your gross profit, again, minus any of those expenses, is your profit before tax. And that leaves your tax percentage at 25% and gives you a net income or profit after tax of $3,938. And then as you look at this, like, just go back and sanitize whether this all makes sense. Okay, so we've talked a lot about revenue. That makes a lot of sense. The cost of goods sold is consistent with our historical costs, so that makes sense. Is there anything, like, you know, do we think that through the year that anything is going to change? Well, Archie, you know what? We just checked back out on our lease, and our lease goes up in June to $1,100. So make sure that's reflected there and copy it across for the rest of the year. The marketing we've talked about, we're going to step that up. Travel should be the same. And is there anything here that, you know, like you've consistently underperformed on or that hasn't been right? And maybe you're like, okay, well, maybe we need a little bit of a buffer, and we'll put $20 per month of extra cost into other, just to make sure that we're not going to exceed. So that's basically it, and that's your budget for the year. And in other videos, we're going to look at how to track this budget on a monthly basis versus your actual expenses. So we'll build another sheet for that in an upcoming video, so you can actually make sure that you're sticking to your budget. And if there's any thing that needs to change as you're progressing through the year, that you can do that.
I hope you enjoyed that video on business budgeting. If you did, please like the video and subscribe to our channel for more great content.